Hey everybody, delighted to have Mario back of Monaco. 64, is it Mario? That's
That's right.
right, indeed. Delighted to have him back. We'd had a chinwag about 6 months ago, and more recently, actually, really impressed with the video he put out. You should go and watch it. And actually, it was an audience member that was following him, Clive Thompson, who I thought was excellent as well. And we did a bit of scenario casting. My overlay video had a bit too many F's and blinds in it. Sorry about that. But his standalone, his video was really watchable. Interesting discussion around CBDCs and the manner of how they get introduced and how they get to rid themselves of the over debt burden, this jubileeing factor, and some aspects that I thought maybe there was a different take on as well. If you want to watch the follow up to it that I put on, but Mario, congratulations for that video. It's been 6 months. Tell us a little bit about what's on your mind and what you've been interested in lately.
Yes. First of all, I'd like to say that you were right about the dollar index. It did break out, and I was wrong. And the reason I was wrong is because I was looking at the cycles, and from the low in '08 to the high in 2017, we had like a 9-year cycle, which is one of the longest ones in the last 50 years. But this year, the dollar has been very strong. As per the dollar index, it went up to around 115 and it is now coming back down. And I think that 2017 high at 103.82, I think that will be the key level technically. The other thing that's on my mind, though, is the shift from paper assets to hard assets. And I think the reason that's happening is because the 40 years of easy credit and low interest rates that we had from 1981 to 2021 is over. And even though bond yields are dropping right now in the US and other countries, I think long-term bonds are not going to be a good place to be. I don't think the stock market is going to be a very good place to be in that it might not crash, but it's going to stay in the range for many years, like from 1966 to 1982, for example. And yeah, there's the chart of the dollar index. And that high there, I think you have it in the little yellow box there in 2017. I thought that was the high. You think it's an upward channel. I guess if we go back below that 2017 high, we could still drop back towards the bottom of your channel. But the other thing about the dollar index that I try to tell my viewers, because I got viewers not just in the US but in other countries, is that it started at 100 back in 1973. So yes, it's a good measure of the dollar versus other fiat currencies, but ultimately, I think gold is what you have to measure it against. So that's what I wanted just to say.
I can't disagree with anything there. As with markets, we'll all be right and wrong. I wouldn't over fascinate about you not being on the money on that. You've been on the money with many other things. I think your comment regarding physical assets is definitely on the game. And also, as I say, we had an HVF target. After you'd run the 110, there were a lot of people that started shouting 125, 150 as if this was going to be just straight up. And, your skepticism was right. Once you get up to these levels, you have a target, you have a pullback. We kind of had a scenario where we thought it might do something. I left the original draw that was drawn, around about from there when what we thought it would do next on the target. And actually, I've been somewhat surprised by the violence of the pullback. I expected some form of a pullback, but I was thought, it was going to kick around, maybe wind up, and then potentially go again. I always like to put one scenario that's the favorite scenario, but that's after the target run, it has been incredibly violent in its move up. So to have, if you just look at the gradient of that and the speed, it's understandable maybe that it's had quite a nasty little turn. A lot of it was based on, the interest rate differential that it put on. That's what put the pain on the pound, of course, because they were doing half a point less often, and the US was doing four back-to-back 0.75s. It's a perfect way to create a run on your currency is not to keep pace, especially when their inflation was higher in the UK. So there's lots of interesting things on the dollar that's happened, but it has now it's certainly come off the boil. In fact, I don't know if you were up to date on this one, and you nearly always are. Powell spoke last night, and it seems to have been interpreted as a bit of a Santa rally because it's all gone back risk on, which means, again, a lean on the dollar. Dollars generally risk off and safety. That's a bit of a generalization, but broadly true, not universally so. But we've seen the equities run. We're also seeing things like the debt pulling back, which we got to. This has been the big driver for the higher dollar, the debt, the cost of debt. So we're seeing this pulling back a little bit as well. So as long as the interest rate on the debt starts pricing in, no, there's more of a pivot to come. So it seems indices are going to have a little bit of a Santa rally, or in the Dow's case, seem to have already had one. And I'm going to pivot afterwards, but I'd like to give you a chance to respond on that, to the chart on that I'm nicked off Alessio and Rob Prechter, to give them credit and dues for also producing some good content. But let me bring up the Dow. It's been one of the strongest. It's already deep in a Santa rally. It did make our head and shoulder down target, but you've got quite a deep, a substantial. I mean, it's only percentage-wise from all-time highs now, given that we've had a ropey year on both equities and bonds. The Dow, which it's important to recognize is not the NASDAQ, doesn't have the tech stocks, more earnings, more physical companies generally, but it's only a little bit off its highs if you have a look at it in
Yeah,
full percentage.
yeah, I think it's down just over a couple of percent or 4% on the year.
Yeah,
And yeah, I was listening to Charles Nenner yesterday. He did an interview with Greg Hunter, and he said that in bear markets, that's long-term bear markets is when you get the biggest rallies sometimes. So and the fact that the Nasdaq is still down quite a bit on the year, and so is the S&P in relative terms. Yeah, I'm not too excited about the Dow. As you said, it's only like 30 companies,
yeah.
but yeah, you can see how the Nasdaq is still it's not confirming that move on the Dow.
No, and the S&P is sort of in between. So both all three have largely made their head and shoulder targets that we were highlighting when Mr. Hunter was saying that you're about to get a 60%. We were saying, well, actually, you're triggering downside head and shoulders for us at the
Yeah.
moment. So I wouldn't be getting too leveraged long for that trade. But the chart I thought was interesting was the other guy's work. Bob Precht of
Yeah.
Elliott Wave, and Licio gave it some airplay, so credit to him also for highlighting it. And I just think this is a very seminal point that I'd like to make, and I'll take your comments on the back of it, is that it's actually post the inflection on interest rate tightening that the real bear market starts. We already have puts where I'm too early, and sometimes you have to say early is wrong. Luckily, I took long dated puts to 24, but on Tesla, Nasdaq, a number of them. But the interesting part that this chart shows is essentially here. The bottom line is the Fed fund rate. So everyone's eyes down here. If you look at 69, it's as the Fed fund rate turns for a down cycle that you got a 36%. The main meat of the bear market comes. There were a bit of a double top here. They cut, then they re-raised. But if you take it from the first pivot, that's a 48 points. This was very choppy as well, but again, 27%. Since then, we've become far more granular and basic with our Feds. We're much less prone to zigs and zags. And it's even more clear. The real move to the downside, 2000, clearly the dot-com bust, 51%, most of it. You're actually close to highs, quite close to highs before. So it seems to me it's often event driven, like the busting of the dot-com, like the subprime crisis, that there's a sudden dawning of realization of the downside risks. And boy, have we got so many things you can choose for your downside risk of choice, whether it be escalation, war, China, Taiwan, Russia, Ukraine, monkeypox, Russian hack, who knows, Mark II. But the winter of discontent, when that comes, that's when the cutting will really, really come brutally. And I wonder if the Fed gets to do its December and Fed rises, or we get a major event which will have, like the dot-com, the subprime,
Mm.
or the repo crisis. This was the repo crisis, and then the COVID crisis. But isn't it interesting? And what's your take and comment as well on equity indices and the nature of the Fed fund rates and when the crash comes?
Yeah, I mean, I don't really trade too much the indices. The last time I did was actually just before the March 2020 crash. I actually, luckily, I had some VIX calls, and I did quite well, even though it got to a point where the broker froze accounts and you couldn't trade because it was so volatile. But in terms of what Powell said yesterday, uh, yes, the market took it as being dovish, but I noticed he said we're nowhere near thinking about cutting. But then you have some economic statistics that are coming out that I think are quite worrying. And I'm not talking about GDP because it's backward looking, but you look at the Chicago PMI, it was expected to rise from 45 to 47 and it dropped to 37. And it's the lowest level since around May or June 2020. So, and that means the economy is in a contraction. And then this morning in the UK, we had the biggest drop in the nationwide house prices month on month, 1.4%. That's the biggest drop since June 2020. So I think the Fed will raise rates. I think it's on the 14, 15, the meeting. They'll raise by 50 basis points, unless, of course, something really breaks in the next couple of weeks. But I agree with you. I think when we get like some crisis, whatever it might be, uh, that the S&P and the other indices could crash quite, you know, quickly, and then the Fed might have to come in and start, stop. They say, oh, we're going to stop uh, raising rates, we're going to stop QT, and if it gets really worse, then they'll start cutting, and then maybe we'll see a rebound in the stock market. But I don't think the fundamentals are great for the stock market going forward for the next 12 months. Excuse me, 12 months.
Yeah, I can see that. Yeah, grab a sip of water. I think as they start flattening out, there's always seems to be the early signs of possible downside, and
Yeah,
then it falls away very hard, and we get a
yeah.
flattening out. And I
But
fear that we're going.
sorry, that chart I forgot to say looks like I like to use the word cascading head and shoulders. So it looks a little bit like the chart of Enron when you go back. Of course, we're not all the way down to zero yet, but it starts like that.
Yeah. So flattening out or slowing of rates often is a precursor to before the eventual crisis. I just did these two lines, and I feel the inflation actually needs the rates to be a lot higher.
Oh
You
yeah,
could you don't rein back inflation by having interest rates lower than the inflation rate in essence, but the actual economic situation needs the rates to be quite a bit lower. I think we're already showing signs of a very. This is why we come up with the phrase hyper stagflation, which essentially puts you in this zone. You're unders on where you should be. Yeah, you're below the interest rates you should have for curtailing the inflation. So you're going to
yeah,
continue to have the inflationary component, but you're actually above the growth. In actual fact, I
yeah,
should probably draw it there because you're above the rates you should have for growth, which is diving. So growth is diving, and you're above the level of rates for growth, but you're below the level of rates you should have for having curtailing inflation. So it's a
yeah.
question of.
Yeah, sorry. The excuse nowadays is from Wall Street and the central bankers and the economists, the Keynesian economists, is that real rates are negative because the the futures market is or the tips market is expecting 2.5% CPI in 3 years or 4 years, and I think that's a really bad argument because
Yeah.
3 years ago the tips market was not forecasting 8-10% CPI.
No, no. I mean, the further out you go down the forecasting curve, the more tenuous any number that you get is because we seem to be cascading event risk of all sorts, of which, as you say, March 2020 was hardly an economic event. It was a globalized health event with a globalized health related response that no one on a 3-year forecast would have had in their books. So I think, as you say, that sounds exceedingly weak as an argument indeed. But the only reason, and I respect you say you don't trade the equities, the point of this is, where do you think, in the event of a similar as 2000, 2007, 2019 going into 220 type, and it's important to highlight actually that in 219 going into 220, we've actually got higher rates now and more debt. So whilst these two look equivalent by size compared to these far larger plateaus, we are significantly more sensitive and we have way more debt than even this time. So we've actually managed to go already higher than the previous time. Plus, we've got all that money that was created now as new additional debt. And this is why I actually, in a newsletter that will be going out now for our trading day tomorrow, our opinion is this is going to be the one that takes us into CBDCs, because it's got to be significantly bigger than 2020 on account of scale. Each crisis is getting bigger in terms of money.
I agree with you, and you go back to the dot-com bubble. I think the crisis played out over 18 months or so, and then you go to 08, 09, it was over 12. I mean, it started like in '07, but the crash was like 2007 to 2008, 12 months, and then you had the crash in March 2020. That was brutal. That was in a month and very sharp. So yeah, they're getting bigger and bigger, and the time over which they happen get really smaller as well. So you could argue that we could have a couple of weeks of major carnage and a huge crash in the markets, which, like you said, could be one of the excuses for them to come out one weekend and say the markets are going to be closed next week, just
For the full week.
like they did after 9/11.
Yeah. Yeah, and I think it could be a longer term. And further on that, as you know, the scale, the Santa rally that's taking place now is just adding a final bit of froth and fluff to that, that long Oktoberfest beer that just gets blown off in the skim in what could come. It feels like, to anybody who's feeling bullish, and you've got to be careful, because it just sounds like we're cynical perma bears that just play the same tune. A lot of what I've said is quite concerned and negative, and most of the risk is downside. And we have been positive a lot about market conditions when there's justification to be. But when you have a sustained environment and you're having a beginning essence of a Santa rally into all this downside risk, hyper further indebted than the pandemic events, and with higher interest rates, you've got to ask that this is window dressing for the mutual funds. It feels like not much else, and it would be very dangerous for retail to get too excited and over participate in that. That's my personal take. It's actually a great opportunity to maybe get some high watermark puts on with a nice long call time if you are a trader. But if you're just an everyday investor, I would caution it would be a great point to take some profits potentially, or to minimize some losses if you've been part of a difficult year.
Yeah, even with the derivatives, putting some puts on, if you're going to have an event like where a CBDC is brought in and they shut the markets, you have to be careful as well, because you could be right on your bet, and then but your broker could say, oh, they shut the market, so this position has been just closed.
Yeah,
But and actually, for longer term investors who hold stocks because they like the company, and like a bit like Warren Buffett, for example, I just think you hold even if they close the markets for a week, because even in countries like Brazil and others where you've had currency collapses, the company's still there. It's mostly the companies that deal with banking, I would say, insurance and things like that, that you have to be careful of. Of course, this
Yeah,
is not financial advice, but it's my opinion.
yeah.
So
Financial companies will be the worst hit, but I still say even holding script in companies that have to do business, if they put medium-sized listed businesses through another pandemic, for example, I would hate to know the amount of debt they're going to have to load up. I'd hate to know the amount of staff that gets laid off. They'll come through that smaller businesses. I like what you said. The ultimate safety is physical, surely.
yeah,
Any participation in script, whether it's equity. I mean, this is the era of counterparty risk. And as I say, I need no excuse for getting it out, and I'm sure you have your own favorite. But just this is a 1 kilo of
oh
pure silver. It isn't it just lovely just to hold and to
yeah,
show?
I have.
Whatever happens on contracts and paper, this will still be where I left it, and it'll still weigh 1 kilo,
Yeah,
and it'll still be good.
I've
Lovely.
got, I don't
Yeah.
know, 10 ounces of silver. I've got 100 ounce bar there, and I've got one that I'll probably try to hold on as much as possible, because a lot of people will say, "How can you have that?" It's a Rothschild 50 gram. Uh,
That
so
looks like gold. That excellent,
yeah, that I
excellent.
mean, yeah, that's the safety. I mean, I do have mining stocks, and am I worried that they could take a hit? Yes, they could, but they have rebounded recently, and they've taken a hit earlier this year. But in the long term, I think they're going to be good places to be. And why? Because they mine money, what I think
Yeah.
is money, gold and silver. And in an environment like this, I think gold and silver are going to become more and more important, and the companies that mine them are going to become more important too.
Yeah, I just hope they don't. I look at all the where does it fail there? If they get shut down for 6 months in a year, they don't generate cash flow, assets go bad, they rust, if not used, things like that. Those are your downside risks when you can't mine the money or status confiscation. I would
That's
say that
right. Yeah.
pretty extreme, but those could still happen. If ever you want to self custody, metal holding metal has got to be it right now. Any thoughts with regards to the chat you had with Clive, which I thought was very, very interesting and was hitting on top bombs? How are they going to? So let's revisit that discussion. How are they going to carry over what they want to carry over to the new system and leave behind what they want to leave behind of the old? In your personal opinion.
Yeah, and one thing I would say, when I spoke to Clive, we were talking about the possibilities, probability of these things happening, that they could do it like that, because that's how they've done it in Brazil, Venezuela, Zimbabwe, all those other countries. And there is a blueprint for it. But are they really planning to do this? Are the people in charge in the West? Do they think that the system is going to implode, or are they just trying to keep it going, keep it how can I say, yeah, kicking the can down the road? I think they are. So I'm not even sure they have a plan. But if something were to happen, like we were talking about, where they would have to bring in the CBDC, uh, I think what they would try to get rid of and default upon are the government liabilities, the national debt, and that would wipe out uh, the bond market. It would wipe out people who have big balances with the banks in fiat currency. Yeah, and that's what happened in Brazil. I remember in the late '80s, early '90s. Um, if you don't have too much money in the bank and you have assets, and you have actually in Brazil at the time, it was good to have dollars outside. It was outside the system because it was not in Brazil. Then you're okay and you don't have to worry about it. So it's difficult to say what they're going to do. And it's some people think that there's a plan to do this. Some people think there isn't, and that they're just incompetent, and that they could just try to keep moving along, like just like Japan has been able to do for 30 years. But hopefully, uh, you know, hopefully I would want to see a total collapse of the currency, because then we can start again. I don't want to see three lost decades like in Japan. So, but if there is a currency collapse, yeah, creditors, people who depend on the government for their livelihoods, for example, and I'm not saying pensioners get something for free from the government, but their state pensions come from the government. Anyone who depends on the government is going to be it's going to be tough. And what they'll try to do, I think, is bring in a new currency, but it will be worth a lot less than the old one, because they'll have to write down the debt. So that's what I see. I think that's what Clive sees as well. And a lot of people think they'll use the CBDCs to bring in the new currency. I mean, recently, I think it was in Lebanon, they had a peg of their currency to the dollar for 20 years. And then overnight, the dollars weren't there anymore. So that's what could happen. Overnight, our pounds won't be there, and you're going to get a CBDC, which will be worth a lot less than the current fiat currency. Maybe a little bit like in Lebanon, you had $100. Now you have Lebanese pounds that are pretty much worthless. So I think that's how it would work. Um, and I'm not saying this is what's going to happen. It's one of the
No,
ways
we're
they.
speculating. We're not going to be right on
Yeah,
9/10 of what we
yeah, yeah,
say. This is not about being right. This is a
yeah.
game of let's capture some thoughts and speculate.
Yeah, yeah,
Because
that's where I see it. Or they could just try to keep what's the word I always forget, just to uh, you know going
roll,
along. Yeah, not roll, but just going like Japan, just like keep a moribund economy for 30 years and like keep doing the same thing, and waste. But I don't think that's going to happen, because people would be too the people are already getting pretty upset and angry in the West, I think, about what's
yeah.
going on.
The interesting thing about just the first statement of wiping out the national debt, which we're pretty sure that they want to do, this is a jubileeing exercise. They're not going to, in a single sweep, wipe it out. I like the analysis of essentially we're going to have a parallel system for a while, but that one is left to wither on the vine, the old dollar. And I think on that, Clive was spot on. And then you actually create a lot of obstructive, a certain level of amount. I would, as I suggested, say 10 grand, or it'll be different for every country, gets automatically converted to the new shiny system, and maybe even a bit of carrot for getting through, like a bit of stimmy or some bonus. And then promises that most of the gateway spy stuff is not being activated, just sweet lies that you've heard about, and that they actively then apply benign neglect to the legacy dollar system, so that, and there's only few gateways, lots of regulations to get through, can't be spent anymore. So you place restrictions on it, so its utility and usefulness is undermined. And then there's a couple of black market back routes, where you get your face ripped off for getting through, or you go through the government. They throw red tape at you, which would be things like um, very difficult to prove tax or proof of payments, various onboarding fees, various requiring of expenditures with state-based entities to get clearance for all these bigger amounts, that you eventually create one set of money gets a bundle of red tape and a lot of cost associated with it to onboard into the new system, thereby creating the more attractive, the free money that is free to roam and be spent, actually has a disproportionate valuation. And then you slowly wither that on the vine, whereby if it hasn't been done by a certain time, it's tapered to zero anyway, and you allow X amount of years for that, and you actually, the debt dies. But my big question was the national, the way that they might manage the national debt doesn't mean that everybody who's at a personal level gets the same benefit on personal debt. So
Yeah,
we already have an apartheid system in terms of rules. One set of rules for laymen like us, and another set of rules for the guys at the top. What's your take on that? Because Clive sort of was like, oh, it's awesome to be indebted because you'll universally be treated the same way.
Yeah, I mean, there's two sides to that coin, in my opinion, and maybe I didn't get my opinion clearly enough on that interview. But the other thing is, yes, let's say you take on loads of debt, and you did, let's say in 2021 here in the UK, a lot of people took on debt because mortgage rates were low. But now, with what's going on with interest rates, many people might not survive. So you got to be careful. You could take on debt because, like Clive said, it might be wiped out. But until it gets wiped out, you could get wiped out and not be able to service that debt. So that's the problem there. And I think in Weimar Germany, the way they restructured the debt for us, plebs, if you want to call us that, was that yeah, they did wipe out quite a bit of it, but in the with the new Rentenmark, I think 30% of the old debt was still there. And like you said, they can always they can always have one rule for us and one rule for the people who have all their capital offshore, the people who are close to power. So yeah, because I don't think they want to wipe out. They still want to have some national debt, like you said, because what does a national debt do? Well, it gives a purpose and a reason for government. And if you don't have a national debt, everything is just too honky dory. So yeah, they might just wipe out 80% and start from 20%, and and also with a more private debt. I'm sure there's a lot of the creditors that are very powerful within the pyramid of power. So yeah, I would be. I mean, my view is always to that view of never a lender or a borrower be. I'm always very careful. I
Like
know that. I know Robert Kiyosaki has done well from taking that, but not very
in the
many.
middle of the cycle, not at the end
Yeah,
of the
yeah,
cycle.
and he saw that when he was young and he went for it. But I don't think everyone is suited for that, has that kind of character that he has. So it's the same
But
thing
it's
with.
also the time. You see, he took it in the middle of the cycle. It's not early in the commencement. Interest rates were rather high. It was very tough to get borrowing.
Yeah,
Then the big easy middle, the 80% in the middle, not the first 10, 15%. He's grabbed the 80% in the middle. Now we're in the final part where it's still very easy to borrow, but the draconian rules, the indemnities, the bail-in, clauses that have been set up, um, these guys could spike the interest rates and demand higher levels of surety, higher levels of deposits. I don't know if you recall the pound collapse with Soros. There were guys saying the interest rates went up to about 14% almost in a day, and everyone was saying,
yeah,
"I need to sell my house. I need to sell my house. Who wants to buy my house?" I mean, you just will be shaken out of your assets. And if we keep our focus on the end in mind, the end in mind does feel like a great unloading of all the assets for BlackRock to hoover up for pennies in the pound out of a banking system. They could even sacrifice the retail banks because if they go full CBDC and they largely wipe out national debt, let's say they don't wipe it out to absolute zero, but they diminish it immensely, or its value is greatly a seascape where it's like a token amount, but enough to justify some governmental management. They will also have killed pensions, which will then immediately give them power over the elderly, which is where they probably want to do most of their population control, which seems to be, in my opinion, there's some element of that. We saw how they behaved with the pandemic. I interviewed a very interesting guy yesterday, a South African, and Neil Hudson, about the remdesivir and putting it in the old age homes and locking people up. It was the perfect thing to do to actually bring greater excess mortality. So they can replace pensions with an immediate UBI, which will probably apply across the board, but the elderly first in lieu of pensions. But then they can have conditions attached to that, which could be cooperation with the Vax ID, jabs, and everything, and they could actually then be in control of the mortality of those people in much the same way as the abandoned elderly being having remdesivir shoved down their throats
Mm.
and being terminated out within months in old age homes. As grim reaper as that sounds, I wouldn't put it past them. And that loop is almost comes out of the national debt being largely reduced substantially or entirely. And you get a doom loop on the pensioners to start. It feels like to me like a doom loop, which
Yeah.
will,
And the other thing that happened like in the last budget, and it was probably going to happen even if Kwarteng was still the chancellor, is that they've uh, deferred the increase in the threshold for inheritance tax in the UK until 2028. So that means, uh, though, that they want to keep raking in, the tax because a lot of people in their 80s and 90s, they're going to die very soon in the next few years, and they've got all these £1 million or more properties, and they're going to rake in quite a bit of inheritance tax. And this kind of shows me that they also want to try to keep the system going as much as possible, though. But yeah, it's all. I spoke to Paul from the Sirius Report the other day. He doesn't kind of agree with what you're saying, and I agree partly. I agree with what you're saying there, but he thinks it's all incompetence. But I think there are people there planning these things, and because they've known for years that we'd have all the baby boomers retiring right now, in this decade of the
demographic.
20s and 30s, and it was going to cause a problem.
Yeah. So and they've been as reckless with credit extension into this boomer group. They played this demographic as the pig in the python, and it's as obvious as hell. And to reset a system now, as these people are all pensionable,
Yeah,
it seems too easy. And I love what you highlighted there. UK extended current limits. They didn't inflation link them. They haven't put them up. Current IHT limits. Most people do not make sufficient post mortality planning for their family members. And guys should be talking to us or others about foundations and using the same tools that Clinton and Blair uses, and have your assets owned anonymously and let them continue to be the use and domain of your children once you pass. Don't feed these beasts any more than you have to. So with the retail debt, what do we scenario? Because essentially there's a fork. One gets handled like the national debt, and there's a big stipend bonus for everybody who's highly leveraged, which actually incentivizes leverage. I think that's a trap. Personally, I think the game is to get you shaken out of your assets, and that's as part of debt dying, interest rates will also escalate immensely. It's part of the relationship, and there'll be enough time for you to get bills you won't be able to pay, and
yeah,
then to be pressed into foreclosure for various assets. There's going to be a scramble for liquidity. That means bottom really crushed prices and lots of forced sellers and very little people that have physical money on hand,
mm,
when all other money is disappearing. So in lieu of that, I actually think I really want to encourage people not to gamble with loading up on debt to try and be birthed into the new system with greater
yeah.
assets. I
I
think I
agree
think
with you. I agree with you because they can always change the rules on you, governments. And yeah, the best thing, like Francis said, is uh, keep it out of the system, hard assets, physical gold or silver. And maybe you become like BlackRock. You'll be able to buy things on the cheap. I saw the other day that BlackRock is going to be the advisor to the Ukrainian government now. So you see, they've wiped out that country, and BlackRock has come in.
yeah.
So I think that's their plan.
It's part of the fascism, which is essentially there's still a corporatocracy in existence, but corporatocracy has merged into government, and government has merged into corporatocracy. So it's not an official Bolshevik communism, but in essence, it's a corporate fascism. Because of course, amazingly, BlackRock was the chief negotiator for Argentina's renegotiation of debt with the IMF. So suddenly we have a private corporation that is actually responsible for the money that the IMF has received, which is borrowed dollars given by taxpayers. It's essentially on a taxpayer base. And is now the representative of how that money and its restructuring should be done. With a country that also was deeply offended by the Pfizer documents it was made to sign for the provision of medicine that also included airfields and all sorts of other things that they were under all sorts of non-disclosure agreements. So you end up with actually this oligopoly of government and corporations that are all quite clearly working together. And that's where the salaries of politicians, I mean, how did Trudeau come to be worth 300 million? It's now, they're all BlackRock employees, essentially.
Yeah,
There's the privatization of the gains they make through passing the policy. Instead of getting, public sector workers on a public sector worker family in government, doesn't matter. You can either be a politician helping with the agenda, or you can be a high ranking supposed quasi corporate private that gets all the government contracts to do all of these advisory roles and strips all the goodness out. You get sinfully rich at the expense of the masses, regardless, and it is a complete cacocracy. The global system is
yeah,
essentially a cacocracy now of
yeah.
corruptiveness.
George Osborne, who was our chancellor from 2010, I think, to 2016, after
Remember
he
him?
left that post, he was still an MP, but he got a job with BlackRock, I think, and they pay him £625,000 a year for going there a few days a week. So, and then you had Tony Blair, who, when he retired, he got a job with JP Morgan for £2 million a year. And I knew I had a client who was at JP Morgan, and he told me that uh, the trainees or the interns, they were taking tea for him. That's all he did. He just sat in an office, and they used to bring him tea or coffee, and that's how they get paid. I mean, in this country, they don't call it corruption, but in my mind, it is.
Yeah, and you have Shlomo Bernanke, who's advisory to a hedge fund, and actually got thrown an award for being, this boy genius. Which, in fact, I just watched him turn yellow as he was Fed chair. I reckoned his liver was giving in, but I mean, there was nothing about what he did that was remarkable. And he was, the man, the right man for the time. They gave us this narrative that he specifically had studied, the Great Depressionomics, and so he was the man of the moment who had studied the specific microeconomic fissure that happened to be that which was applying to us post the crisis. And I mean, they throw awards and credibility, prestige, and status at each other
Yeah,
inside this captive cartel
yeah.
of
And
criminals.
they get paid hundreds of thousands for speaking for half an hour. Look at
This
Janet
is,
Yellen with all the
yeah,
Wall Street.
this I love. I mean, Hillary Clinton. You would think she's an engaging listen for that kind of money, but she's absolutely worthless. It is literally a money laundering system to the Clinton Foundation. I don't know if you saw, they're getting so in your face with it. I've been writing in blue and yellow. It's almost like the Ukraine flag, but a guy sold a canvas of some scale. It was about as big as half a room. That was essentially a blue and a yellow flag. Blue sky for the
Yeah,
Ukraine sky, and the yellow fields for the lovely soil that they have. He painted a canvas like this, and that sold, inverted commas, for 46 million. This is a hot art market. This sold for 46 million. And I defy you to do a painting of that scale
so did the
yourself.
the funds go to
And
the Clinton Global Initiative or something.
yeah, yeah, God knows where it really ended up. But I mean, that is just 46 million of money laundering.
Or it could be
And there's so much they'll bundle up in art because there's this woo-woo factor of,
yeah. Well,
hey,
art
it's worth
art
it.
is
This guy's a really hot painter, you know.
art is very subjective, isn't it? So it's easy to do that. And I guess you could say it's the Swedish flag as well instead of Ukraine. Uh, if you don't want to anyway. Yeah, 40. I think a lot of the very wealthy do that. When you see people buy works of art that you think are worthless, but they pay millions, it's kind of a tax dodge, I think, as well.
Yeah, I think there's a whole next level of scam in this laundering thing that goes with that. Because I actually looked at it. It was a very simple wooden frame, canvas pulled tight around it. I didn't get the guy's name who allegedly paid it, but you can be sure that transaction is a legitimization of an immense amount of money that was super, super hot and
Yeah,
probably came all the way from the flag it was reflecting in terms of its round the doors. And what do you make of this fact that this FTX guy can still go speak in? I don't know if he actually did his speech in New York or not. We should find out. But what do you make of the fact that he just appears not to even be arrested as yet? And there's all these softball New
yeah.
York Times articles that clearly are not focusing on the criminality of him at all.
Well, I hadn't really, actually, I had heard of him about 6 months ago, but I didn't remember much. I listened to CoffeeZilla. He's on YouTube. He's really good. He unearths scams and frauds, and he's shown a light on FTX and SBF 6 months ago. And I remember watching that video, but I completely like I'm not really covering crypto or looking at it, but when it all happened, and I think it was the day of the after the U.S. election, I
Midterms,
started
yeah.
looking. Yeah, I started looking into it, and uh, it looks like fraud, but I can't say it's fraud because he's still free, like you say. But what the mainstream media is trying to spin is that he made some very big mistakes. He misplayed, they mislabeled accounts and things like that, and didn't realize how leveraged things were. And they're saying, oh, he wanted to help everyone. He wanted to be a philanthropist, but they're not focusing on the fact that this could have been a huge money laundering operation for all the billions that the U.S. taxpayer is sending to the Ukraine. So I don't know. Um, I'm surprised. I'm surprised and not surprised because he seems to be a very well-connected person. And one thing
Yeah.
that made me think, "Wow, this is not good," is that he had a conference in the Bahamas in April, and he had Bill Clinton and Tony Blair sitting next to him, and I thought,
Yeah.
this guy is not going to go to jail.
Yeah, you're a product of the company you keep, and neither of those two have gone to jail. So he will be equally unlikely to, and God knows what his theft of us. I mean, in essence, that is also tax because we know it's been utilized to this darker agendas and funding elections. All those who participated paid an involuntary tax. I find myself regretting I didn't see that coffee YouTube that you were mentioning.
Yeah, CoffeeZilla. Yeah, CoffeeZilla. He's a good YouTube
CoffeeZilla,
channel.
yeah. So, what should people be doing and focus? We've said get physical. We said get prepped. What? Any detail? Anything extra you want to add?
I think
Should guys have going into Christmas money in bank accounts of any substance beyond
Uh,
3 months living
well,
costs?
yeah, I have some money, but not that much. Is for to pay taxes, but because I'll have to pay some taxes. But no, not have much. Only the necessary amount that you need to pay your bills. Here in the UK, you've got direct debits every month. So, but the other thing I would say is fear. Don't let all the news, all the things that are happening in the world make you fearful. Just keep doing what you do. I don't know what each individual person that's watching here this video does, but stick to your business. Try to stay outside the system, and just realize that if you have a lot of money or cash in the bank, you're financing the government. You're financing these people who are trying to really they don't look after your best interest. So for me it's a no-brainer not to have too much money in the bank. Yeah, and fear, that's it.
It is their biggest product, and they're going to have a big fear event. I can't help but feel with the crash that I suspect we're going to have. Referring back to the equity I had earlier, keep bank balances low and
Yeah,
rather have it stashed. And I mean, we use a bunch of guys called Pure Gold. They have buybacks, auto buybacks. I mean, you have it, you open it, you check it's there. You still have some of the old packaging. They'll literally take it straight back off you, and you'll pay the spread, which is pretty tight. And in actual fact, if you get the full fear and we get a run, I mean, I even saw JP Morgan saying oil down, gold up again as a call. So what's your view on the actual price performance of metals on
yeah,
the spot paper price? Let's clarify.
yeah. I mean, I'm happy with the price for my domicile, which is the UK. It's up like almost 10% this year, and I think in dollars it's down just over 2%. And but if you look at the bond market, it's down. The TLT, which is an ETF for government bond, U.S. government bonds with the maturity of about 20 years, it's down like over 20%. So yeah, I think the metals have done well to preserve wealth. People think it should go up all the time. I look at it more in relative terms, and also, like you said, it's the peace of mind that you've got your bars and coins, silver and gold, and even if the system collapses and they shut the system for a week, you're still going to have it. That's the important thing as well, and it will act also as insurance. And if there is some kind of CBDC, collapse of the system, they bring in the CBDC. If you can have gold and silver on the other side of that, I think you do really well because they will be a lot higher valued in terms of purchasing power because everything else is going to be so wiped out. And I think gold and silver are going to hold their value. I can't really tell you the price in fiat dollars, but I think there's still a bit of time, to compare gold to the dollar, but I think there will come a point where it doesn't really matter. You're going to talk in terms of grams and ounces, but I think we could finish the year maybe unchanged versus the dollar, which would be around 1820 and maybe even a little higher.
It's trading up nicely today at 1796 at the moment. That's after a little dip through that key 1680 level, which has been
Yeah,
was the resistance. I've done a lot of TA before. Let's put a 2 day on there, but that was the old just before the big dramas of the dip, the full COVID dip, the secondary COVID dip, and then the continuation. So we jumped onto that ledge with a little bit of a bull flag. We've been above it. We had a small technical spell here when the
yeah,
Fed was thing. I think it gets a Santa rally if equity does, and probably does at least as well, and will be better to hold if equities dump.
yeah,
Uh, just think I could see the premiums getting very, very high. I think if equities
yeah,
dump one more time, as expected on an event, I think we are there and the CBDCs roll out. The fact that they're
yeah.
12 weeks in doing a trial that smells of drill to me to go live. And I keep saying it. And silver, by the way, also doing a bit better as well. Let's get this one over
It's
there.
unchanged. It's unchanged today for some reason, but with gold
It's
being
back
up.
above 22 though. Yeah.
Yeah, yeah. The thing about gold is what I forgot to say. Whenever like is you think there could be, and I do as well. I mean, it's always a probability, but if there is a major crash, and like we had in March 2020, uh, the reaction to it by the central banks and the governments, I think that will put a rocket up the value of gold and silver, and then we could be talking, uh, to 3,000 even, I would say. But when that will happen, I don't know. Right now, things are still, there's not much fear out there in the markets. Things are still okay, but gold seems to be sniffing some kind of pivot, I guess.
It's interesting. The last time we did a lot of cross analysis, we did it against oil. That was when we called for single digits oil and gold to actually go up in that environment. And then since then, the oil has repumped and gold has relatively been more benign. And I'm just wondering how the gold, silver, uh, let's just do crude oil contracts and have a little look at that because I like to keep an eye on the ratios as well.
Yeah, no, that's important as well. Gold, silver, I mean, it's still very high, the gold silver ratio. It's
It's
at
a buy silver.
80 right now, 80.4. So, and that's always a key level, that 80 historically, even though we've been up to like 125 back in 2020.
Yeah, so here we go. We're having a look at this is gold ounces divided by oil barrels. You can see the super pump um, that went during the May 2020. So that was very dominant. Since then, you can see gold has slipped and oil was very, very strong during this period and was coming back. You could see that bear flag after that slap in the face, as we call it. So you get a blow off and you get a slap in the face. This was the time to pivot back out of gold, back into oil. And you can see the break of the flag there, down, 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 and there was just all the way along. This is why we also say keep on keeping on. You just get continuation patterns down, 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 all the way along here on the down. But it does seem now that actually there's been a slowing, and you've made a higher low, and you've now made a higher high as well. So it could be the beginning of a little bit of a bottoming in that reversal relationship. There was the warning that gold will be outperforming in that period as we were coming in from 19. So it's a super interesting chart. But I think both could actually do reasonably well next year. But you could just get a bit more overperformance out of the gold generally. We should
Yeah,
maybe have a look at silver as well and
yeah,
do
and I
silver.
think silver, yeah, because silver has underperformed gold, so I think it might even outperform gold going forward.
Yeah, it likes gold to lead, and then it overruns. So you can see I've left the overlay drawings of the gold on there, and they're very, very similar. They almost match up. So you can see the correlations, just the movements, extremities, are the numbers here are just far more extreme. So, 52 there are for silver value. So that was silver divided by crude oil, and then right down to 6. I mean, that is
Mm,
huge. And this looks like a proper reversal now, in spite of silver actually being a little bit lame today.
mm.
This does look like a proper reversal. You've taken out legacy lows. So I think, that could be a signal in that with regards to that. And we start getting back, if we have a look at it on a much longer time frame, where there's not too much data there, unfortunately, from the COMEX. Yeah, so 2 days about as much as you get. But I sometimes like to have a look at it from a point of view of, how much, what's been your range level of trading. We are at the low end of the range here for the cross valuation of energies versus, even if you take the events of COVID as exceptional and you put it on the outside and you have a channel there, you would argue, your midpoint is still some way higher to go. Just a thought. So I think metals to do well even on their paper market, And heaven knows if they clear balances out of people's bank accounts, then all money is, all bets are off
Yeah.
for what it
Yeah.
could do.
I think what happened in the UK in September, October, with the fact that the defined benefit private pensions almost were pulverized, woke a lot of people up to the fact that they need maybe a little bit of gold outside the system. And speaking to some dealers here, they said they've had a lot more interest from people like that to have a little bit of gold.
Our guys at Pure Gold in the UK, London, said they had a 700% increase in a single month on the annualized average of insider bankers buying physical gold.
Mm.
So yeah, that sure as hell tells you when the guys that are involved in the game, many of them saying, I can't even tell you what I know, but I need to buy. When you have that sort of news going on, it certainly makes the case. It certainly makes the case for it. What's your big plugs, and how would you position that we haven't discussed yet for the new year, Mario? If you were in equities, anything you'd hold? You've got miners, anything else?
Oh yeah, I have miners and I have like Newmont and Barrick, the usual, the big companies. They have good. I think Newmont dividend is about 5%, so I think that it's nice to have a dividend. And I'm looking as well at now the gold royalty companies are interesting as well. I think.
Which is your
Uh,
favorite of those?
I mean, Franco Nevada is the biggest one, but I think EMX Royalty is a good one. I think that's an interesting company, and then I've got a bit of energy.
EMX. So that's
EMX,
Newmont. That looks like it's bottoming nicely there
yeah,
and got a bit of a rally on.
yeah. So I've got also the Brazilian oil company Petrobras ADR. And I know the political situation in Brazil is a bit uncertain, but I think Petrobras is like a national institution in Brazil, and the government gets a lot of revenues through the dividends because they're big shareholders in it. And that's why I hold it because it's a good, like 30% dividend. And yeah, the stock is a bit volatile, but it's another way to have exposure to commodities and get an income. What else? A little bit of uranium as well. I think that could be interesting. I saw in the
Petrobras,
budget.
let me get it up. Petrobras, which one do I want? That's the
It's
Bavesco
you want the PBR PBR ADR. It's in
PB.
the
So that's US listed. It's an
yeah.
ADR.
That's the one I have.
Yeah.
Uh, PBR. It's trading around $11 or something, but it's quite choppy. I think we had a huge, big drop a few days ago because it went ex-dividend. And that's why that
Yeah.
happens. And then it rebounds. And hopefully, when I get the
It
dividend,
would if the dividends are as high as you say they are. What percentage dividend did you say
I think
on average?
30% right now. And I think
Wow.
6 months ago they gave an extra dividend. So yeah, and I take that dividend and I buy more shares. So that's what I do.
Compound. Yeah.
Yeah. And
Reinvest that
I
way.
do it through an ISA account because it's tax free here in the UK.
Yeah.
So yeah.
Yeah, good. That sounds pretty cool. That sounds interesting. Any major predictions? If you were sticking your neck out, happy to be wrong, no one's going to crucify you for, what would you say people are underestimating going into this Christmas quarter 1, 2023?
Uh
What
underestimate.
could happen?
I
Not a
think
prediction, but could.
I think the geopolitical situation could get even worse. Um I mean it got worse from February this year with the Ukraine, but it could get even worse in terms of domestically for the US. I think there's a lot of division there. And also maybe with China.
And with China, would it be financial? Would it be more lockdown, absolute Nazism, or will it be Taiwan related? Uh,
Yeah,
there's
I
so
think
many
more
things.
more Taiwan related, and again versus the West. I think in terms of the lockdowns there, yes, people are protesting, and I think they're very draconian in China, but so were we in the West. And it's funny how Trudeau criticized China while he was taking money from the truckers, the protests. They're taking money from their accounts, and he's having a go at China. I'm not defending China, but I think it's more of a more of a geopolitical thing. In the U.S., I think though things are getting pretty divided domestically, and it could erupt, and that could be quite significant. I think the U.S. is the most important place to look at. Maybe not in the beginning of the year, but throughout the next 12 months.
A bit of a tinderbox for many things. Could BLM make a comeback? Could rioting make a comeback? Could social unrest make a comeback in there? Could especially if we lose the ATMs go
Yeah,
dark. I have a feeling we could have ATMs go dark.
yeah,
I truly do, and
and
and the whole CBDC rollout, they're going to push this thing. I truly suggest to people not to be caught overweight in your bank
yeah.
account. Hold things,
I
physical
just,
assets.
yeah, I also look at the governor of Florida, Ron DeSantis, the way he speaks. I mean, he's totally anti Washington, D.C. I think that's very significant. Here you have a huge uh, state in the United States, and the governor is like, doesn't see eye to eye, talks about things that we've been talking about. And that's
Yeah.
what I think is going on there. And then you have California is the other extreme. So not just like BLM, but the whole the whole setup seems to be in trouble.
Well, it's always fishy. They want to sell you a hero like Ron DeSantis, and then you'll see he's fully knees deep in the ADL and the Zio industries, and he may just be playing a role, being your hero, the guy who's the
Yeah,
one few person who's just
yeah.
voicing all your concerns, and that it's just another Donald Trump
Yeah,
thing.
I mean, that's possible. It's the divide and conquer game, and I try to stay away from politics. But I think, despite everything that you just said, it could be something that affects the whole system, and if you do have a financial system as well, despite what you might think of Ron DeSantis, yeah. So and sometimes they do that on purpose.
Yeah, don't get me wrong. I prefer his message and the cut of his jib. I just don't know if he's not
Yeah,
controlled.
I
I
agree.
get it. I've seen a few things that make me think twice. They keep one guy out there that makes you think you're still being represented. That makes you still have some belief in the political system, and that makes you inactive and not
Yeah,
take action. The problem is everybody has been anesthetized into inaction.
yeah,
We should have created our own society, our own community. That's why I mentioned one small town, the guys behind it, and just be bartering and creating and saying, this is what we want. We want our own country. We want our own. And there's representatives all the world. And we should not be reacting to their gains and thinking
yeah,
that somewhere we've got
yeah,
representation. They don't work for us. They never have. They
yeah.
never will. They
It's
all
like
co-op.
it's like I don't know if you heard of Neo Oliver. He's a guy who comes on GB News. I mean,
Yeah.
he's a breath of fresh air, but you have to wonder how are they allowing him to say those things? And it's probably a little bit of what you said is to make you feel like there's some hope. But that's why I tell people the best thing you can do is try to be not dependent on the government as much. Be as independent as much as you can, self-reliant, have your own community. Like nowadays, my community, I do meet people. I have met people through my channel, not just online, but physically as well. I think that's the most important thing. And don't be waiting for, like you said, the men on the on the white horse to come and save you.
There's no one up there working for you. They're all
Mm.
representing themselves and the people who paid them to be there. That's my take. It sounds a bit cynical, but it takes a lot of hope from some people away. And I say, hope kills you. It's the hope that kills you. It's the lack of activity that you haven't done in securing your own self-reliance. That hope keeps you expecting somebody else to do your work. If you want the security, you've got to go out and start nailing it down. Too many of us have sat back. We haven't pushed back. I think they've sewn it up too much already. Now you got to get into that
Yeah.
full independence. And one day they'll come for us all, I fear, especially if you're doing too good a job. But anyway, on a more cheery note, we'll enjoy building our wealth in metals, it seems, physically held assets going into the new year, and a bit of resources stocks, if assuming the share markets still survives pretty well. Despite a possible dip, providing you can hang on, I think it could be some really nice holds there in the oil. Great dividends as well. Income matters, doesn't it?
Yeah, that's right. And as long as you don't leverage yourself, yeah, the market goes down, but you just, it's like your house. If you own your house to be a home and live in there and you don't have a mortgage, why do you care if the price goes down 20%? You're still
Yeah,
living in it.
yeah, 100%. As long as it's still serving you, it's a notional. There's a difference between a value to you and a price. Absolutely. That's been great. How do guys find you and your channel? Please give us all the details so that everyone watching can go and sub and listen.
Yeah, I'm on YouTube at Monaco64. I make a video virtually every day. I do a live stream Sunday night, London time, 9 p.m. And I'm pretty active on Twitter as well. And I post my videos on Rumble, BitChute, DTube, and also on LinkedIn as more like an individual. So that's where you can find me.
Awesome. Excellent. Thank you very much for coming on and sharing your thoughts and views. It's been great to see you again. And God strength. Have a good Christmas as well to you and your family, and to all your viewers and friends. And yeah, go check out Mario's stuff. A regular poster. Thanks for coming on, Mario.
Oh, you're welcome, and a great Christmas for you as well, and all the best.